Hi, my name's Honish. I'm the former head loss mitigator for Indy Bank's HELOC division. For the last 4 years, I've been one of the top real estate trainers and advocates for real estate today. As you understand, you just went through a qualifying program that's to assist you with deciding whether or not you qualify for a loan modification. I want to walk you through the process and help you to understand the difference between loan modifications and recasts. What the bank is offering you right now is called a trial loan modification. A trial loan modification, bottom line, is anywhere from a 3 to 6 month program designed specifically to extract information so that they can use it against you to collect later on. I would say probably 1 out of every 100 people who apply and get a trial loan modification actually get what they call a full long-term recast, 30, 40-year fixed rate. Generally speaking, they like to do it from full to stated doc programs, and those are the ones that have the highest likelihood of actually getting a real loan modification. The reason I'm discussing this with you, based on the criteria that you've submitted, the statistical probability of you getting a full long-term recast is almost impossible. I've worked for the banks for close to 22 years as an asset manager, as somebody who does collections. Basically, the person who calls you up, harasses you every day, and scares the crap out of you trying to get information. Here's what you need to understand how the banks see loan modifications. First of all, approximately 80% of all loan modifications wind up back in default. Okay, and they're aware of it. The terminology is called amortization of toxic debt. Basically, what they want to do is extract as much information from you as humanly possible, maybe pick up a couple of payments from you if possible, but they're still going to foreclose on you. You can go on the internet right now and Google literally countless stories of people who have not been converted from trial loan modifications into long-term recasts. Further, you can also do the research and find out that there are people who did loan modifications and were foreclosed upon during the loan modification process. Understand what the bank is trying to do. They're trying to gather information about you so that they can collect. There are basically only 3 processes by which the bank operates: doing loans, doing loan modifications, and doing short sales. And all 3 packages are exactly the same. They ask for exactly the same amount of data. People ask me all the time, what should I do? What are my options? If it were me giving you advice, a standard homeowner, as someone who's literally worked for the banks my entire adult life, I would tell you to settle your debts with the bank, and the only way to do that right now is through a short sale. That option is up to you. You can certainly investigate bankruptcy, but you need to know that the laws on bankruptcy have changed, and almost 75% of those who think that they're going to file bankruptcy or get some kind of protection for their house, they usually get set aside, wind up doing a short sale, or worse, losing their home to foreclosure. The goal here is to get your life back on track. I would really like the loan modification program to be legitimate. However, I'm sorry to say that it really isn't. It's just an effort by the bank to collect information from you. For you to be that one person who is lucky enough to do a trial loan modification, have it convert into a long-term full recast, are extremely minute based on the data that you've provided. I apologize, and I don't really want to be the bearer of bad news, but that's the reality of what you're dealing with. The bank really doesn't believe that you're going to pay them. In fact, all they're trying to do is gather your data so that if you're foreclosed upon or you walk away or whatever it is that you plan to do, they can use the data you've given them, turn it over to a collection company, and try to collect on you. Now, I know a percentage of you believe that based on the current political administration that perhaps the President or Congress or the Senate or powers beyond even my comprehension are somehow magically going to let you stay in your house and wipe out your debt. The bottom line is this, and this is how the bank sees it. You signed a contract with a bank to borrow money to purchase your house. Whether or not you plan to stay there, that is your business. But know this, I don't care if you're foreclosed upon, I don't care if you walk away, I don't care if you think you're going to get away with it. The bank is going to try to find a way to get money back from you, now or in the future. So let's take this from the very beginning. What really happened here? You signed a deal that was either on a 3151 interest-only plan that made sense for you at the time. You lost your job, or your income changed, or whatever the case may be. And I know you want to stay in your house, but you need to understand a house is simply what it is: sticks, bricks, and mortar. Okay, you can find a new place to live. But know that a bank, any bank, Wells, Chase, B of A, One West, my old employer, they're going to come collecting for that money at some point, if not now, sometime in the future. And if you turn over a loan modification package, they're going to use that information to try to collect on the debt. Don't believe me? Go ahead and call up the bank and ask them about a loan modification, and the first words you'll hear while you're on hold are, information that is gathered during this phone call will be used for the purposes of collecting on a debt. Okay? There's a reason for that. They can now take that package and give it to a collection company or to an attorney to try to collect on you. This is a fact. This is something you can simply go and Google. You can find out about people who've done loan mods or tried to file class action lawsuits. Statistically, short-term trial loan modifications never convert into full 30 or 40-year fixed-rate loans. If you had a full documentation loan, that's a different story altogether, but that's not why we're having this conversation. The reason we're having this conversation is trying to find a solution for you and for your family that makes a lot of sense. So what makes sense? One, in my opinion, just like a credit card, you need to make a deal with the bank. Now, there are myths about what this will do to your FICO score. Now, I've done surveys and I've talked to a lot of agents, attorneys, and people who work on credit. The worst thing that can happen is anywhere from a 0 to 200 point FICO hit. And for most of you, you haven't made a payment in the last 6 months to a year anyway, so I don't know why you're worried about this. However, with that said, anywhere from 0 to 200 points might be what your credit is affected by. But know this as a simple fact. Okay? This is really important. In 2 years, it's gone. That's it. Your life's returned. If you walk away from your house, if you're foreclosed upon, here's what I can promise you. You're looking at 5 to 7 years of it having an effect on your credit, much like a bankruptcy. Okay, here's the other thing. There is nothing that Congress or the Senate or anybody's going to be able to pass to make FICO scores lower or some kind of special program that's going to make it able for you to borrow again in the future. That's another myth of the industry. In fact, the lending guidelines have tightened up. So for the next 5 to 10 years, it's impossible, unless you've corrected all your debts or outstanding payments or outstanding collectionary points, so that you can get your life back on track. It's really simple. 2 years or 5 years. It's that simple. When it comes to FICO, it's completely random. No matter what anybody tells you, what they say is an absolute fact of what will happen with your FICO score is incorrect. It's always random. FICO score is determined by a formula. That formula has one minor variance, and your credit may not even be affected at all. The decision for you at this moment is, do I make a deal with my bank? Do I find a solution with my bank? Do I find a qualified individual to help me with it? The person who gave you this disc, or put you on so that you could watch this, wanted to help you. And I've made it very clear to everybody I work with, the reason this video is out there, the reason I have a website dedicated to any and all of this information is very simple. The trial loan modification, more or less, is a scam. The bank wants to collect debt, collect some money on their debt. They want to collect information on you, okay? And they still plan to foreclose on you. They know that 80% of those that do trial loan modifications or loan modifications in general don't pay anyway. So you need to be aware of all these very simple and basic facts when you make a decision about turning over that much information to the bank. My advice to you, as it has always been to everybody in this situation, find a qualified real estate agent, probably the person who has you watching this right now, and to do a short sale. Settle your debt. Get your life back on track. Wait a couple of years, and guess what? You can go back to the same bank that you just shorted money on, and they'll lend you money again. These are all options that are available to you. And the sooner you make that decision and start changing things so that you have a better tomorrow, the better it'll be for you. Because the worst thing you can do at this moment is nothing. I recently went to a bunch of fairs to do research on homeowners, and what I've discovered is most homeowners aren't buying anything that can be physically affixed to the house. Siding, stucco, lighting, anything that affixed to the house. Sales are down 50%, which means to me you guys all understand that you're going to have to leave at some point. So what I don't understand is, why wouldn't you make a deal with the bank to get the monkey off your back, to make the phone stop ringing, to make the mail stop? Or you can go in a completely different opposite direction. You can try the trial loan modification program, which is what you basically all qualify for. And you can pay money to the bank, and you can find out the horrifying reality that they're still going to foreclose on you, and that very, very, very few people ever convert to long-term fixed rate payment schedules. My name's Lee Honish, and if you have any more questions, please let me know. I'll be more than happy to review your file. Thanks.